Now the patterns I'm going to show you and I basically use are these patterns. The ABCD pattern, where AB equals CD, the Gartley pattern, the butterfly pattern, the three drive patterns. What is the common denominator in all that? This. A very fascinating thing. They all have Fibonacci numbers, rather ratios, which tie them together. So let's draw them and see what it means. Let's move on. Gartley patterns. Now, first of all, the name is because there's a very famous technician, H.M. Gartley, lived in the 30s. He brought out a book that cost a number of Ford cars at the time. Very few people bought it, of course, but it was a very important book. Now, this is a pattern which is well known. It's called because of that, Gartley 222, to be exact, because it's on page 222 of the Gartley book, H.M. Gartley. And the pattern is a simple pattern, again, in the sense that you have a top, you have a low, higher, move up, a lower high, a higher low, and then the end. This is a bearish. In other words, you sell here. Now, what is interesting about this is that this includes an ABCD. This is AB equals CD. And this is a big move down. This is it. Maybe more visually pleasing. XABCD, where AB equals CD. And these are the ratios we're talking about. 786. For this triangle, in other words, this retraced to the 786. If you drew a Fibonacci, it would be 786. This is extended at the 1272 of this. And this move is the 618 from X to A. This is a bearish. You sell at the D. What does that mean? It means it means that as you go in this area, you are here, you have the X, you have the A, you do nothing. That's the low. You have the B, you do nothing. You have the C, and the C stops and starts going up. At that point, what do you know? You know this ratio, you know this ratio. And at here, you can draw, in the future, as I'll show you, this area. In this area, you can draw it exactly like you want to. It's make-believe, yeah? That's where I want it to go. Or better still, that's where I'm interested in, if it goes. And you draw it. And that means you're only interested when it gets there. All the way up here, you do nothing. You wait. Put an alert, and that's it. Example, German Bund, 60 minute. X, A, B, C, D. At 618, at 1618, these ratios. And the A, B, C, D is at this little dot. Close, not exact, but close. Is it close enough? It's up to you. You might say yes, you might say no. It's up to you. Do you take it although it's lower? It's up to you. But here you sell. All the way up here, you do nothing. Here you sell. This was from 2 days ago. I don't know what's done today. Yen Forex, weekly. Bearish one. X, A, B, C, D. At 618, 618, at 1272, this 0.454, I'm not particularly bothered. You sell at D. That's what happened. And that was that day, the fateful day, when someone had a really huge fat finger, and in the end, of course, it was not to do with that. It was no mistake. Interesting enough, all this is a lower trend, so this is a case where you sell into the trend. Lower lows, lower highs, lower lows means a downtrend, and you sell into the trend. I'm sure lots of people would love to sell into the trend, or a downtrend, or to buy into an uptrend. Bullish Gartley. Oop, sorry. X, A, B, C, D. Upside. You buy at the D. Again, here we have A, B equals C, D. This is the ratio. That's why it's in dots. This, again, is the same thing. XA, BCD, AB equals CD, 786, 1618, 618, lovely ratios. It might not look at you, but this is visually pleasing as well. I'll show you some others. They are not so pleasing. Why is it pleasing? Because the ratios are there. Example, Swiss franc, bullish. You buy here XA, BCD, and you see this time I've drawn the ABCD. ABCD is exactly at the dot. So here you buy. Means all the way down here you do nothing. Here you buy. You put the order in. Now, of course, you may put the order at 100. It might go to 100.2. You might miss it. You might put it at 100.2. It might go to 100.3. You might miss it. Personally, I get upset. But when I get upset because I'm not in a good trade, this happened to be a good trade, I always remind myself, what's more important is the analysis. Did I do the analysis correctly? If I do the analysis correctly, somehow I'm pleased, because really that is more important than the actual trade. Might seem funny to you, but I'll talk about it a bit later. So the analysis here, whether you took the trade or not, I do not know. Interesting enough, if you didn't take it here, you see here, retested it, gave you a second opportunity. And then the rest is history. Euro yen, 60 minute. Gartley pattern complete, the 786. Note there's an ABCD here. So this is 786 Gartley here. And I've also drawn the Fibonacci. You see that although here it's 786, here the exact point was there. So it went a little bit lower. That's imperfection. Now, if your stop loss is 2 ticks below, bye-bye. You should be doing something else. That's not, don't look for perfection. Don't go for two pips. There's no way you're going to make. All you're going to do is get upset with yourself. You got to give it space. You got to breathe. But here, AB equals CD. And here you buy. It went up, you retested it. Yesterday, I don't know what happened.